And this is your end of day as well as end of week market recap for Friday, January 16th. First of all, have a great extra or long weekend. Really nice, I think, to get a little bit of time off at this point in the month. It has been a very strong month to start. I think at this point we probably stalled a little bit in terms of performance. I think markets have gotten a little bit overbought in the short term. So probably, a little bit of backing and filling or going sideways, I think is completely normal at this point in the year. Risk disclaimer in front of you, everything that we're going through is for information purposes only, not giving out any advice or recommendations. Everything that we're going through is for information purposes only. So really quickly, I've been using this quite a bit in these end of day videos just to kind of give you a sense, because I think at this point, unless you've been living under a rock or haven't been paying attention to the markets so far in 2026, you know that this year has been a lot about a couple different things. Big rotation in the market. Hence, you could see that it jumps right out here in this spreadsheet, and I'll zoom in here or just take away the camera so that you could see that. But large cap growth has been one of the underperforming areas of this year to start off with. And there's been that rotation out of some of those big names with growth down about 0.5% year to date, and a move into both small cap growth and value. Those are up huge to start the year, up 8%, almost the same for both the small cap growth and small cap value. Also, large cap value has outperformed quite nicely. That's up about 4% year to date. You've got the small caps now up 8% as a whole for the whole group. And meanwhile, SPYs up respectively 1.4%, and the Qs have actually trailed a little bit. They just can't seem to really get going because of a lot of the unwinding of positions. Now, looking at today's performance, and we'll go through a couple of these charts here, but silver miners came back, even though the commodities also kind of taken a breather. Reminder, like, those commodities have been so strong to start the year. It's okay for them to rest a little bit. So that's kind of the overall thought. I think a lot of towards the end of this week, I would say, especially yesterday and a little bit today, a lot of growth setups, I don't want to say failed, but just kind of came off a little bit. Now there's the exception, like Micron gapped up today on an insider buy, came back in a little bit, and then finished strong for the day. But it does feel like at this point markets are a little bit tired. I talked a lot about in yesterday's video, because I always try to recap the previous day's video, and I mentioned that risk management. Sometimes when we for as I'm going to speaking as of in the trader's perspective, but when we tend to, sorry, I'm just going to flip the screen here a little bit. When we tend to get the participation that we got so far to start this year, very strong participation, a lot of sectors working really well. But as once we get that type of a move, right, we tend to kind of sometimes relax some of our discipline with what we're doing, right? We want to just be in some of these things that are trending and moving, multiple percent consecutive days. What tends to happen, or at least speaking in my perspective too, that you want to get involved in some of those areas, and you tend to kind of relax some of your trailing stops that you need to apply, some of your outright stop prices for trades that don't work, and you get a little bit sloppy. And that was kind of where my video yesterday was focused, and was about risk, managing risk, and just being disciplined. And I think when you kind of get a little bit of a situation where we had yesterday, which was a larger than normal fade in the last couple hours, I think that should, like, a light bulb should go off in your head if you haven't been, if you didn't lock your gains in at the highs of the day yesterday, and you kind of gave back a little bit of your gains yesterday, then a light bulb should possibly be going off in your head saying, hey, I need to really fine tune and be disciplined, as this market has been strong, but is got like a little bit tired as we got to the end of the week. So that's kind of my thoughts, and that's how I traded today. I was in a couple trades. I could talk about those in just a second. I want to go over the days, some of the interesting moves for the day, and then I always like to talk about some of the trades that I did. But just and I always like to go through the indices here. But yeah, you could see like SPY for this week was actually I believe just down fractionally. I think it was down. Got my spreadsheet up here. I think it was down 0.3 of a percentage point from where we closed last Friday. So you could see, obviously we had a little bit of volatility in the middle of the week. We came back, but then just kind of weren't able to really extend here. So we're still above the value area for January. So I think that overall is a good sign. But we're also kind of just coming in a little bit from what we experienced so far to start the year. Qs are a little bit of a, they're a little bit of a frustration. They've tried to break out of the value area for the month several times, going all the way back to the 7th, right, where we try to go higher there and failed. We've come back in a little bit. And we've had a couple of days where we're strong, but there's been no follow through from that. And again, a little bit of a Debbie Downer statement here is really the Qs haven't gone anywhere in about 3 months. Now, that's not to say that's definitely not all growth stocks, because the Qs are market cap weighted, so they're top heavy, some names. Because if you look at obviously what the junior Qs have done, even though they were down just slightly for the day, they've been off to a huge start to start the year. And again, that's very good to I think show the illustration of what's happened here. And it looks very close to this chart, IWM. Not exactly, but very close. And again, it just shows right now there's been rotation out of those bigger names, which have more liquidity and it can absorb the outflows and a move back into that. Another chart that I've talked a lot, or a relationship that I've talked a lot about this year, is what NVIDIA has been doing versus the rest of the semiconductors. Basically sideways here, right? Not much of a move here in the last like 3 weeks in NVIDIA, but the overall sector is strong, right? And again, it just shows you that there's a lot of I think this is up somewhere around like 10% year to date. So there's a lot of money that's has been made or could have been made in the semiconductors. It's just not in some of them. It's just like not in NVIDIA so far to start the year. And again, I think you could kind of quantify that a little bit. NVIDIA is the leader in a lot of areas, but there's a lot of catching up in some companies and what they're doing. Memory chips, I think everybody has probably looked at the SanDisk chart, which extended and had more gains today, even though came off the highs from the day. Micron did get through this little consolidation with the insider buy. So nice chart, something that I would be looking, even though it's extended here, I would be looking for follow through after spending about a week or so going sideways, letting some of the moving averages kind of catch up a little bit after a big move. But these are names definitely to watch. Okay, so that's the semi space. The other space that's been on absolute fire has been the aerospace and defense. Again, there's a few of these groups, but aerospace and defense, very, very strong. This is equally weighted. Some people like to look at this ETF. This is the space ETF. They kind of resemble one another if you want more specific names that are tied to space. Rocket Labs, which got a downgrade I think it was yesterday, got a downgrade. Today, it got an upgrade. I think that was Morgan Stanley upgrading it. So up 6% today. Also, ASTS also completely overcame that downgrade from, I think that was 2 days ago, and up 14%. Very strong, some of these space stocks. Uranium, I mentioned that. You could either look at URA or you could look at URNM for a couple ETFs there. Couple names that I think look very good here. CCJ looks very close to that chart. I'm also watching LEU, which is just about, looks like it's trying to break through its value area for the year. Again, you could look at this on the weekly chart. As I mentioned, uranium stocks. Oh, sorry, I have not showed weekly performance, but uranium stocks are one of the biggest gainers this week. So watch this level 329.15. Again, I could go on and on with different groups. I feel like if someone will always tell me on Twitter, "Oh, you didn't go over this group or you didn't go over that group." Um, Here's also an ETF that I like here. This is called the American Industrial Renaissance ETF. So it's a lot of industrials, but it's more so your industrials that are like lesser followed, right? I call it the nuts and bolts ETF. But you've got a lot of names. I think what was your top performer today in this group, or where I just want to make sure the group that I'm going to talk about next is in this ETF. But yeah, you've got STRL is in here, AGX, POWL, Comfort Systems is in this. That's ticker symbol FIX. So you also have a lot of aerospace and defense in here. Huntington is in here. That's HII. So not only obviously space companies and drone names have been super strong, but also this is a ship maker, Huntington Ingalls Industries, also moving out to the upside. So again, not just aerospace, but also overall just defense names looking very good. LHX was a name that I have my eye on for next week. This had this crazy when it was awarded a contract, it went all the way up to 361. It came all the way back in the same day, but basically just kind of coming back into some support, and it looks like it's trying to turn back up again. The banks, some of them strong, some of them not so much. Morgan Stanley, Goldman Sachs, all look pretty good. Right. Again, the materials is another group that's been very strong. Oops, I don't know why I can't bring up Goldman Sachs right now. Maybe because it's the end of the week. I've talked about this IYM ETF, just up and to the right. So going through some of these names. Yes, this market has been very strong. As you can see, the participation has been very strong. At this point, we're going to get this. So let me bring this next chart up. All right, this is from Earnings Whispers. We're now going to be right in the middle of the heart of earnings season, and that's going to take precedence, as well as we may get eventually some information about whether the tariffs are going to be rolled back or something to that effect. So that might be a little bit of a knee-jerk reaction. So there's some macro to watch too, but ultimately this is where the focus is going to shift for the market. So we're going to get some really good results, and I think we're probably going to get some bad results too. That's kind of how it works for every earnings quarter. The last couple earnings quarters have been pretty strong, but I would say, from a tactical aspect, right? I think overall that just flip this back here. I think this next couple weeks, and again, I'm not making a prediction here, but I'm just saying, considering some of these moves that have taken place, it wouldn't be a bad thing if they kind of rest a little bit and kind of come back in a little bit. So if you're wondering, like, in the next couple weeks, why some setups are not acting as well as they did, particularly earlier this week, last week, it's because we've made a nice run already, right? And I think sentiment also plays a factor too. So, for example, you go back to what happened, and I know this feels like it was a long time ago, right? But if you go back to the end of 2025, right? Here's what we did, right? There was very little buying that was happening here, right? Sentiment got pretty negative, right? Hence, we moved off of that. Now, I would say two things. I think sentiment's hotter at this point. So we've gotten probably short-term overbought as I went through some of those charts. And number two, we're going to be entering earnings season, which is typically a more choppy type of area of the market. Sometimes we don't go anywhere during earnings season because of the factor that some companies do well, some don't. So what did I do? I just, took down some more risk. I pretty much had tried to be pretty aggressive with the amount of positions that I was holding as we saw breadth expand and more participation. The last 2 days I've been taking off some risk, not all risk, but just some risk because ultimately I think things will get a little bit choppier. And I think that there's going to be, I think this market has been very strong, but it's okay for this market to rest a little bit because of two of those factors: earning season and the fact that many sectors at this point have gotten a little bit of short-term extended. Let me just show you the performance for the week, right? And by the way, that's not bearish, right? That's just being a risk manager and understanding what this year has done so far. All right, here's this week's performance. As I mentioned, SPY was down for the week, just down 0.3 of a percentage point. Same thing with Dow. Small caps continue to be on fire. The Qs were also down for the week. EEM up 1.3%. So international markets outperformed for the week. Gold, even though some of the precious metals took a little bit of a breather towards the end of the week, still gold was up 1.8%. Bitcoin, I'm going to show you the chart of Bitcoin in just a second, but that was up 5.6% for the week. Again, value outperformed growth. Uranium, we won over. Metals and mining were up 9%. The builders had a big week. I didn't show that chart because I can't show every chart here. Semis were up 5.7%. Staples had a big week too. I got a lot of questions about consumer staples and why that they were strong. I don't know, other than just more rotation. It's a group that's been under-owned. I'm not sure if that's really a negative sign. I think it's just more rotation out of some of the overcrowded areas of the market and into some of the under-owned areas of the market. Sometimes that happens. You could see on the right side here, the FANG ETF. This is FDN is what I use, but you could use many other ETFs for FANG exposure. Down 2.7%. I don't know why. I guess I don't have software on here, but that ETF was also down for this week and really underperformed. Upside, Peru, South Korea, which has a lot of memory chip exposure, but Peru has a lot of commodity exposure, really, really strong. Looks like a couple of those other sector charts. Japan did well for this week with no FX related, up 5%. Argentina underperformed, so did India. So let me just go through a couple other charts so that you can kind of see this. All right, here's IBIT. This got off to a good start, and kind of came upon a little bit of resistance here. This is IBIT. If you want to look at Bitcoin futures, you'll kind of see you'll see exactly what I'm referring to here. We did take out a VPOC up here. So we ran into this VPOC and we're digesting after that. Remember, this is overhead supply. Don't have it in IBIT because it's different. It's a different volume profile than futures, and that's the same thing when you look at S&P futures and you look at SPY, for example, right? Different volume happening. But if we could hold this 5-day moving average, maybe we could begin to kind of hold this and begin to continue to move in the direction of up and to the right. I also mentioned EPU just to kind of take a look at how strong, right? These more commodity related countries are doing. You could also look at ECH, which is Chile, which has also been pretty strong. Also EWC, which is Canada, slowed down a little bit here, but is also the active breakout going out in here in Canada and some of the other commodity related country ETFs. That's it for this weekend. We will be putting out some content over the weekend, as I always do. We'll put out our watch list to start the week. If you are not a member of Tribeca Trade Group, go to TribecaTradeGroup.com. There's a coupon code there, TTG new, for new members, where you can get 50% off your first month. Look forward to seeing you in the trading room, and have a great long weekend.